And they use that general audit approach as a jump start to make their audit packs, and also for industries, for types of industries. Somebody makes a banking pack, and then you refine upon that existing banking pack and make refined banking packs.
I have three versions of this presentation. I have a workshop version that lasts an hour and a half. I have a conference version of this, and I also have a lunch adjusted version of this presentation. So I will utilize the third. Let me make a couple of comments about this particular project. First off, let me say something to the accounting academics in the room, something that you might be interested in. This paper, I'm pleased to say, is forthcoming in Accounting Review. And so I'm hoping also as a result that this continues to kind of open the door for this line of research in our academic journals. And secondly, let me mention that the front end of this article is very accessible, and I think could be utilized in your undergraduate classroom experience in terms of having a discussion article about the role of this type of technology, the challenges of measuring benefits, and the need to measure benefits to make a business case. For the broader audience members, let me also just mention there was a lot of questions yesterday about, is there any evidence that there's benefits to these type of technologies or activities? And there's a couple of different ways to look at that. One is you could say, well, I have field-based evidence or case-based evidence or anecdotal-based evidence. Our objective in this article was to jump into that arena and say, well, let's see if we can somehow contribute by finding broad-based measures of evidence in terms of a large sample of corporations. And so that's where we're at on the end. Now, essentially, we were coming into this thinking, hey, what impact does ICM or internal control monitoring technology have on internal and external assurance outcomes? Again, there's another way to think about trying to measure the benefits of this or researching ICM technology in general. One aspect is to consider what drives firms to adopt or implement this technology. The other side of that question is to say, well, how did this improve the information environment? We wanted to focus kind of on a middle question. How does this impact the assurance process or the outcomes? And so in doing so, we were thinking, hey, can we see stronger internal control systems as a result? Can we see where this actually, is there benefits in terms of audit efficiency or audit economies? And then also a benefit in terms of an outcome, audit report timeliness. And the other side note about the hypotheses that we looked at is we also thought about this technology being one of two types. One, the firm adopted the technology kind of from I don't want to use the word superficial, but a very simple compliance motivation. Hey, we simply want to comply with something out there. And in particular for us, we were interested in SOX compliance. Versus other companies that said, hey, we got to comply with SOX, but let's use this as an opportunity to also to kind of transform our information systems or embed this into what we do on a daily basis. And so we also wanted to try to take a stab, at least initially, at providing evidence about those two types of implementations. It's not a perfect measurement, but we at least wanted to try to provide something towards that. This paper went through a number of different iterations, and the final iteration really heavily relied on the recent COSO guidance that was issued last spring, that was mentioned earlier today and yesterday afternoon, about how to motivate this study around the need to provide evidence about the benefits of controlled monitoring, that monitoring component in the COSO framework. And if you look at that COSO document, they talk a lot about the benefits that should be there. Hey, this should improve organizations, either in the systems or controls. It should also have an impact on the assurance function. So we should see benefits in terms of this could aid the external parties as well, not only the organization's internal, but also the external parties that come in to do assurance or certification. So we wanted to try to find evidence on both of those. Now, interesting enough, when we were, the original versions of this project, we were finding evidence of benefits, okay? And you would say, hey, I'm going to implement technology, I want to see good things happen. Well, during the review process, we would say we found benefits, and the reviewer would come back and say, duh, of course it's going to be positive. Why would it be negative? And we were saying, well, we agree. We shouldn't find negative. The hypothesis direction makes sense. I want to implement something because good things should happen. But for us, we were finding a large number of disagreement about, is there really any evidence of benefits out there? Hey, show me some, anything. show me anything. And there's also evidence of where audit partners, external audit partners would say, hey, I don't really think technology is going to have a big impact in this arena. It's all going to be about people. And we don't want to eliminate the people version completely, but we want to say, well, technology has got to play a part somewhere in here. So that's kind of the tension there that we were dealing with. Now, talk about what we did very quickly. One, we went out and we tried to, in terms of our proxy for this internal control monitoring technology, we went out and we identified companies who made announcements about, hey, we're implementing this technology in direct response to the SOX assurance process, right? Monitoring controls, providing feedback about those controls, and then ultimately providing opinion about those controls, right? So this is the company's implementation, not necessarily something that the external auditor is using, but the client's implementation of this. And we came up with 139 of these companies that we had particularly identified. Our control sample is essentially kind of everyone else that's out there in terms of publicly registered companies who had the appropriate data. Okay, so this is across the time period 2003 through 2006. Now, our proxies for some of these different benefits is we thought, well, if these things should help the internal control system, we should see a much lower likelihood, or at least a statistically significant lower likelihood of material weaknesses after implementation. Okay? If these things help with audit efficiency or audit economies, can we see evidence of this whereas impact audit fees, in particular the external auditors' fees? And then lastly, we noticed, hey, how about audit timeliness? The ability to generate, come to an opinion, generate a report. Now, during this time period, one of the things that kind of created a very interesting aspect of the study was we all know that audit fees were skyrocketing. 2003 to 2006, they were going out the roof. One of the key concerns was how can we, the increase is a given. We can't do anything about that. It's going to happen. But how can we constrain that increase? So that's what we were dealing with. The other thing that we noted was that everyone's audit report delays, in other words, from the year-end, fiscal year-end to when the external auditor's opinion is actually issued, that delay was going up for everyone. Right? So again, how can we constrain that delay? And so we tried to study these three different aspects. Some of the things in terms of hammers that we threw at it to say, what do we need to control for? Well, we want to control for the size, the complexity of the company, the financial health of the company, the reporting quality in terms of the financial system, the information system itself. What kind of quality information is being provided from that? The auditor, who is the auditor? And also kind of some self-selection issues. One question that should immediately come to mind is, okay, so they implemented the technology. Is this really just a question of their commitment to that? In other words, it wasn't the technology that made a difference. It was just the fact that this company was highly invested or committed to the idea of improving their systems. So we also did some tests to hopefully try to control for that aspect of the test just a little bit. So some self-selection issues that we tried to control for. Yep. Well, at the end of the day, okay, post-implementation, what we found, and we were also sensitive to what do these companies look like before implementation? Are they different than the control sample? All right, so we kind of thought about all those issues and we were very sensitive to them. Post-implementation, the likelihood of a material weakness being reported goes down. Post-implementation, the percentage audit fee increases is constrained. Those subsequent increases are smaller compared to the control sample. And those audit delay increases are actually smaller. So post-implementation, they're able to issue their audit reports in a more timely manner compared to their counterparts or the control sample. So I mean, essentially, those are the primary results. And back to this transformative versus compliance issue, for the most part, those results didn't differ a whole lot. Kind of surprised us. Part of it, I think, is a sample issue in terms of the power of our test and sample size and the design of that variable. But we did find partial support that transformative implementations seem to be more important, particularly in the audit report delay area. So that was the one piece that we did find results in terms of the difference between those two items. Robustness test, alternative control groups, looked at management changes, CEO turnover, CFO turnover, how does this impact things, the simultaneity among the dependent variables, audit fee increases are related to audit delay increases and so on. So we tried to wrestle with some of those issues, control for those. also just the econometrics of the material weakness tests themselves. We threw a lot of hammers at this, and essentially the results remain very robust.